FDIC ends disclosing total assets of banks on quote-unquote problem bank list, as disclosure might suddenly trigger a disorderly run. And we just saw the yield curve is now back inverted. But hang on, backtrack. What does that bank information mean? The FDIC tracks struggling banks that are at risk of failure. However, normally they disclose how much total money was held in the troubled banks, but now you can see they're not going to do that anymore. If people saw how much money was tied up in troubled banks, it could cause a run on banks, triggering a wider financial crisis. Now, they just did this to prevent panic. This suggests that banks may be in worse shape than reported, with liquidity issues spreading. The domino effect could cause bank failures, especially in smaller regional banks, potentially forcing government intervention. The hidden risks could escalate, leading to more bank mergers or failures and shifts in investor behavior towards safer assets like gold or Bitcoin. Remember that. We got a lot of stuff to talk about. I'm going to try and do this as brief as possible. Watch until the end of the video. Subscribe to the channel, turn post notifications on, all that other stuff, since I research, edit, upload, record, not in that order for you guys. Let's get into the video. First things first, we saw SPY take a nosedive, bounce perfectly off of the level that we called out at 591. It came down to 590.50, came all the way back up, but couldn't make intraday highs, and now it is selling off once again, breaking below support at 594. SPY overall looks weak. If we take a look at the daily time frame, we broke below key support levels on higher volume than the previous week when we actually pushed higher, which is very bearish. SPY is losing momentum, has been losing momentum, and there is liquidity issues in the overall market. If at any point the SPY decides that it wants to crack beneath 589.30, which will break you beneath this parallel channel as well as beneath a key support level, I will be going longer term puts on the overall market, expecting and waiting for a market crash. Plus, we're not seeing things that look too well. Trump announced tariffs on Canada and Mexico will now go in effect next Tuesday if the drug flow is not seriously limited. But he doesn't stop there. He says that there's going to be an additional 10% tariff on Chinese goods, which is going live March 4th. Now, this is on top of the 10% tariff on Chinese goods that went live earlier this month. So Trump is just popping off with the tariffs. Now, on top of that, White House formally instructed agencies to prepare for large-scale layoffs. President Trump also directed that no later than March 13th, 2025, agencies develop agency reorganization plans. He also just announced the closure of 120 IRS tax offices nationwide. We are seeing China start to come wrap around Taiwan again. All of these geopolitical tensions are going to grasp the market, and we have more. It doesn't end there. First of all, we saw jobless claims rise 242,000, estimated 222 and previously 220, which is the highest since October of 2024. And we are also seeing the PCE come out in the morning at 8:30 a.m. Eastern Standard, I believe, on Friday, which is going to move the markets either below that key support level that I talked about, or we get a relief bounce coming into the weekend. Lastly, Epstein files to be released today with flight logs and names, which we don't really know what to expect here, but it could potentially be some sort of catalyst for particular companies, particular big guys, right? Okay, moving on. Right before AMC and Gamestop, because we found some interesting stuff with them. We called out some puts on Tesla in Discord. Honestly, this is a pretty easy trade. Several trades are almost layup of trades right now to make easy money. Now, I didn't take a lot of trades today. I have spent all my time doing research and I didn't feel like watching my trades. We are seeing Tesla bleed off. It cracked below 303 and it is flushing down, currently at 287. You can see we came all the way down to 281. I told you there's no support below 303, and you can see it better for yourself on the weekly chart. You can see that Tesla is bleeding off, now surpassing volume from the past several weeks, all the way since mid-December when Tesla was actually skyrocketing. People are selling off of Tesla. It is not looking good. Expect Tesla to come between 275 and 267 very, very quickly, probably next week. If we get a relief bounce, that relief bounce is likely to reject off of 303 or 315 at most. Nvidia released earnings yesterday, and it is selling off even further. Revenue came in at 39 billion, a 78% increase year over year. I don't feel like covering all this because it's going to waste a lot of your time, but basically Nvidia reported earnings that were pretty good, and they did beat earnings once again, which is completely fine. But people are understanding, investors are understanding that leading into 2026, there will be diminishing returns, especially across the overall market. Having overvaluation in plenty of stocks and not getting a pullback, it is just not worth valuing Nvidia above $150 or $170 or just pressing it to all-time highs. The price at $130 is not attractive for long-term on Nvidia anymore, in my personal opinion, and I think that is what investors are seeing. Palantir is at 89. We got a flush lower, but we got a relief bounce. I don't see this getting back above 91. I see it coming to 83 before it gets to 91. Okay, finally, GameStop, AMC. First things first, we are seeing XRT back on the threshold securities list, which, if you don't know, is an ETF that holds GameStop that we expect to be used as leverage to short GameStop down, and it is back on the threshold securities list. But last time it was on here for well over 13 days and nothing happened. The SEC didn't do anything. Hopefully Doge is looking into the SEC, but as of right now, we can see that they are failing to deliver something in this ETF. It's very odd to see ETFs on here for several days, several times. It is no coincidence. We also have a little bit of tin before I get into the charts for you guys. And then something that Robert Kiyosaki just said that's interesting. We are going to tie a lot of things together here. And of course, if you haven't yet, make sure to like the video. First of all, margin calls. This Reddit post goes on to state that all these rules from FINRA, the C27, C35, T15, C14, FINRA rule 4210, extension rules, deadlines, all this stuff, they go on and on to finally state that there's margin calls happening in a market that we don't see, or there's margin calls that are occurring and we are about to see the event of that come into fruition when Roaring Kitty, of course, plays his wild card if that does happen. But essentially, Ryan Cohen reposted a tweet that said, remember when everyone wore masks like a bunch of, yeah, you can see it right there. Ryan Cohen reposted that. First of all, this guy's ballsy. But there was also a tweet from Ryan Cohen wearing a mask on May 12th, 2021, which you can see right here. Okay, May 12th, 2021. Why is this important? How are we going to correlate this? Well, that tweet was the start of a 27 calendar day run on GameStop. So are we going to see the same thing? Well, this is the post from May 12th, and everyone is looking at the Crash Bandicoot with 2 controllers missing, potentially, right? Just a side note, but the Crash Bandicoot right here. And if you zoom into this, well, first thing that we can see is it's a little bit odd that the picture, first of all, he comes up and he reposts a picture relating to the tweet. People are obviously going to go over to the tweet with him wearing a mask where we have been seeing and talking about, here we go again, all this other stuff. He's been correlating things back to 2020, 2021 when COVID was a thing and GameStop was rising. Anyway, so we look deeper into this and we find that the specific Crash Bandicoot artwork used on the GameStop filing page is the one from the game subtitled It's About Time. Don't you find that a little bit odd, correlating to Roaring Kitty's Time magazine post? It's About Time right here in the Crash Bandicoot picture. Now you might be saying, Larry Sucks, this is a bunch of crazy ass tinfoil. I don't even know why you're putting this in the video. Aside from him reposting it, aside from this clearly being the main thing in the image, guys, you can go over to GameStop's website and Crash 3 is the backdrop of the SEC filings landing page. I mean, it's not all tin, right? It's not all conspiracy. And it's very odd the way they correlate. Anyway, so what does this all mean? What could this all mean? Well, we'll get into the charts in a minute, but Robert Kiyosaki posted this. Bitcoin is crashing. Bitcoin's on sale, and I am buying. Why? The problem is not Bitcoin. The problem is our monetary system and our criminal bankers. America is bankrupt. Our debt, including social programs such as Medicare and Social Security, including our $36 trillion debt, is over $230 trillion. Out U.S. bonds are a joke. When countries such as Japan and China stop buying our bonds, inflation will go through the roof. Our economy and the U.S. dollar will crash. There are a few reasons why. When Bitcoin crashes, I smile and buy more. Bitcoin is money with integrity. Fake money is a thief. I'll trade fake money for gold, silver, and Bitcoin anytime they go on sale. Is he potentially right about this? I found some things with Bitcoin that sort of correlate to this post. I do personally believe that at some point, Ryan Cohen can be purchasing Bitcoin, potentially. And that may be announced pretty soon. And if he does so at this very good price, that could be huge for GameStop. Now, if we jump into GameStop's chart, you can see that we have been in a bearish downtrend. We have a huge cup and handle that formed, and apparently we are still in the handle. Looking at it more macro on the monthly chart, we can see the RSI is coming back down to the 50. We may potentially get a bounce right on this yellow line that you guys can see down here, in which case indicates a strong uptrend. You saw it back here from 04 all the way into the 08 crash when we peaked. You saw it back here from August of 2001 to October of 2001, hitting this peak. And then, of course, you saw it in April of 2020 all the way into June of 2021 when we saw the massive rally. And once again, you're back above it on the monthly. I think we're seeing some very, very important key levels with GameStop. And if you take an even more micro look, we just finished a head and shoulders pattern. We also filled the gap, and we're also coming up above what I said we need to come and close above. We're not closing above there yet, but this level is crucial at $25.30. If we close above this today, that will be great for GameStop, or at least even on the week. As far as AMC goes, taking a step back, it looks pretty perfect, right? AMC is playing out its similar cycles like it normally does. And what I mean by this is just the bars pattern on the logarithmic scale. You bring it up to match and you can see AMC is right here, right? I mean, it's playing out pretty identical. It doesn't have to play out the same amount of days. It doesn't have to play out exact, but all we know is something is close and it's going to be happening soon. Now, I do want to note that there is plenty of possibility that the market is going to crash. There is going to be bank runs, but there is also a possibility that Bitcoin does very well and GameStop and AMC squeeze as that happens. And I mean squeeze, like I'm using the word. I'm not saying a sneeze. I'm not saying a fake squeeze. I'm not saying a gamma squeeze. I'm talking about actually crushing these bigger entities that are scumbags and they're corrupt, and hopefully Doge does something about it as well. But speaking of that, investors are demanding that the Department of Government Efficiency abolishes FINRA, which is, I mean, great, right? SEC ends investigation into crypto exchange Gemini, and Texas Business and Commerce Committee passes strategic Bitcoin reserve bill and as it advances to the Senate floor. Right now, watch for Bitcoin because we actually came down to 84K. We actually wicked all the way to 82, which is very scary, probably shaking paper handers out. And if we break below, I mean, originally, if we break below 84, like I was talking about, Bitcoin is coming down to 73. Now, we did actually wick under, which I think is very, very scary. But you can see the body of these candles actually held to 84K. If we get back beneath 84, just expect a hard move down to 83. I also want to state XRP built out a head and shoulders, but it's holding up very well compared to the rest of the market. Very, very well. If XRP does see a flash down, I would easily put buy limits between 177 and 160 on XRP. This is the range I think if we finish the head and shoulders pattern, we come down into. So again, 177 and 160 for XRP begins to move higher. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to subscribe to the channel, like the video on your way out, and drop a comment down below to engage the algorithm. If you're not in my Discord server yet, it's the top link. If you don't have Mumu yet, it's the link under that. And if you don't have 1000x stocks, it is the link under that. It is time to level yourself up. First of all, Discord server, the best thing on the list, which myself is in there, and then the most amazing people who trade stocks and crypto and talk stocks and crypto. So whether you're a beginner or advanced trader, this is the place to go if you have questions or just want to bounce ideas back and forth and level yourself up in trading. You also see my trades as soon as I take them, and we have a ton of channels for amazing alerts on the stock market. And then the second link is for Mumu. If you sign up using my link and deposit into your account, they are going to give you up to 30 free stocks, each valued up to $2,000 per stock. Do it before February is over. And then also you can earn 8.1% APY on your uninvested cash. So whenever you're not in a trade, you're still earning interest. So if you can't get those high percentage trades, just let it sit in your account. Overall, guys, that is what I got for you for today's video. There's also a ton of other benefits here. 1000x stocks has great fundamental tools to use to evaluate which companies are best for long term, and I'm going to be talking about that pretty soon, so make sure to have post notifications on. That is it, guys. I love you all. God bless. Lottery Socks out.